Right, legends, welcome to the, well, trying to think of a title, um, day trading or scalping within a range. Okay, so what do I mean by that? What is the purpose of this? What is the aim of this? The aim of this is okay. I'm going to use Bitcoin as an example, and this approach can be used on any market. That's up to you to go backtest. Don't be a lazy fucker. So, for example, if this was a clean chart, okay, I'm at current moment I'm leaning bearish, okay, at a higher time frame basis on Bitcoin, but the trigger. And while waiting for the trigger, what can I do in the meantime? Do I sit? That's fine as well. So for example, say we've got this consolidation here, okay? If it goes above here, I'm bullish. If it below here, I'm bearish. There's being bearish and then there's executing a trade. Okay? Just because I'm bearish does not mean the trade is ready. Okay? So that's basic bias. So in the meantime, what do? This is where the range levels help me. So where do I get this range from? Well, it's clear. Okay, let's establish that first. Range drop, that was the first low formed. That was the first high formed. This range is further proven to be useful with this low here. Support, support, break below it, deviates it, gets back above it. As soon as it gets back above it, it rallies. Same with the upside, it deviates it, gets back below it, deviates it, gets back below it, and again. Which proves that this range is useful. Step 2, the mid range. Is it giving me a good pivotal level? As you can see, it is. Okay, don't need to get into depth with that. It's clear. Okay, as soon as you get that reaction on pivotal levels, then you know the range levels you're using is clear. So I've got my range now. Okay, now even if you're day trading, that's fine. You use the macro levels for the big reactions. Then what I do is I break that into further half. Okay, and you get the mid range. Is that proven? Look at that. It doesn't lie. Okay, you can visually see it, and near enough there, but it'll do. And same with here. So what I've gone on further done is I know that okay, I've got this bias that makes me bearish. Okay, now if it goes below here, then that means it's ready to expand. I'm bearish, but it's above this range low. But that would technically say, well, why are you not bullish? Because it's not just based purely on ranges. You gotta look at context, everything else as well. These ranges levels are just one piece of the jigsaw. Remember that. I won't purely go bullish based on this alone. At what point would I get bullish? Is well, I know that here, just above here, that's bullish. Then using this range level, break above that. As long as it stays above that, that's my markers as to where it shouldn't go. For example, say when it got above here, it held. It was bullish. So then I use that in confluence with my normal breakdown. So my normal breakdown would be, let's remind ourselves, this, okay? And to further confluence that, we've got that there. Happy days, okay? So that's how we use them. Now if we break it down for structure, part one is the structure here to what point would I get swing bearish if it wasn't for the range levels, okay? Don't need them. It's this here, isn't it? So we've got this consolidation here. If it breaks below that, then that means we're ready to expand. Consolidation leads to expansion. Consolidation leads to expansion. Consolidation leads to expansion, so it breaks out with a bearish bias. That's when I can go for the swing trades. Okay? So, what does the range levels do? They help with that. Lo and behold, do you think that's a coincidence? No, it's fucking not. Okay? So, I get to swing shorts. If it makes a clean break below here, then I can short it, and this range levels is acting as SR level. Notice how I've used these range levels from ages ago and they're still holding, which shows you specific key levels that are pivotal. So while we're waiting, so you could say, well, fuck all of this. I'll either wait for a clean break above, clean break below, and that's fine. A lot of the time I do that as well, and I'll go to other markets, swing trade them when I was ready at the time. But if it's solely this, what do you do in the meantime? Now, this isn't the only way to do it. This is just my way of doing it. Okay? There's many ways to skin a cat. I do it this way. Okay, so what I've then done is split this up, this range level to this range level, into further halves. So that's a half, and I've split this up into half, so on and so forth. Now look at the reactions there. Do you think that's a coincidence? Nope. Nope. It can't get above here. Nope. Okay. Same with here, here, here. You can see how they act just natural SR levels without even drawing SR, using a flipping range from years ago. Okay, but it further proves that you're using the right range, first and foremost. Secondly, it proves to you market is moving in increments or certain rotations. Okay? So you can use it many ways. You can use it for a stop loss placement. You can use it for entries. You can use it for just managing a trade. Many use cases. Okay. Sounds like I'm shilling some sort of ICO or something. But yeah, carry on. So this can be. I'm gonna have to use hindsight examples, obviously, but I'll give an example because that's gonna teach you. So we had this range before this happened, and if you remember, when we took the short. Day trade target was here. When we shorted it there, day trade target was there. I said only if it breaks this cleanly, then we can say swing short. It proved itself. Okay, so that's one example. Say you're short, it's a profit objective in this case. It's also, if you're looking for a short, well, that's the entry technique as well. And as long as it doesn't make a clean break above this range level, it's good for a short. If it moves above it, what it does, it moves to that range level, which lines up with this. So that's the target confluence with that range level. Another example is, now this was an example I got stopped out on, but I was asleep at the time. No excuses, but it is what it is. So for example, say if you were short and I was looking for here, well, okay, initially the short from here worked out. It was working, and then as soon as it dipped, retested, that's fine, and then go back below it. Well, it's consolidated. If you go back above it like this, that would be your entry exit. So it shows you how to exit as well. Okay? So if it deviates that level, that's the level to exit. So now you can see how I'm bringing it all together. Let's look for entries now. If you remember, go to your old chart. This was Monday's high. Okay, there. Well, look at this range level lining up there. So as an entry trigger, if you remember, if you watch the reviews, there, you could have taken it along there. A stop loss placement, depending on how you trade, I normally would do it like this, a stop loss there, but if it was to make a clean break below here, not reaching, I'd cut it away before you got to that. That's just my approach. I'm usually used to using wider stops because I can take that and it works for me. But whatever approach you use, okay, you can add your own element. You don't have to do it blind to blind, blindly like mine, okay? You just say, oh, I like this from what I go over or teach. I'll add this to my toolbox. Okay, think of it like that. That doesn't mean you have to change the system. The best traders I know, they'll take what they like from whatever they learn and they'll create their own niche with those tools. So as you can see, and then if you want further confirmation, so my entry, I always give a conservative entry. Further confirmation would have been, if we go back to this chart, where was it here? So whatever reason you got there, there's a retest, the consolidation, breakout, mark structure, then there. Then you could have had a stop loss there, or the thrust candle that took care of. It's up to you how you want to play it. But the target we were waiting for was the yearly open. The yearly comes in around there somewhere. Okay, these stops into the yearly open. So that's a trade trigger using the range levels as a confluence. Okay. Yep. Another one is capping the market here. So I'm just giving you brief examples of it. I don't need to go into detail. Just what I've given you so far should be enough for you to work with. What I can also do is break that down into further range levels. So if I get this to this, look at the 0.25, 0.5, 0.75. Look at how that's being used. Okay, so if you remember, we took a long yesterday. Okay, a little scalp. It didn't go to target today or overnight. Well, later on in the day it did, but I was gone then. But we took the long into this level here, if you remember, as target. But look what happened. That was a rainbow cap in the market, so it's used as a profit objective. Okay, so when you know, so I'm gonna have this messy right now. Where was the long? It was here. Okay, if I break this in half as well, that's halfway point of that. Okay, so I give the reason for the long there in the video. So the date is, today is the 5th of April. So if you go to the 4th of April, you'll see the reasoning behind it. But as you can see, the fact that it couldn't break that, it could be a profit objective. And if you had further targets, well, if it cleanly breaks above and holds, well, you know that it shouldn't break below this range level. So it could go to the next objective, which is these tops and into these lows. And our target was what, if you remember? These highs here. Now this feed it didn't, but on BitMEX feed I usually be using BitMEX feed. Okay, it did. Okay, it doesn't matter. I'm only using Coinbase because it just gets in the way of me deleting all the levels of BitMEX and just use it here. Okay, but yeah, it doesn't really matter. Okay, you get the concept, the overall concept. Okay, so that's a basic understanding of it. So going forward, let's give you an example of what I'm looking for. So I've got those range levels marked out. I did a long example, okay, before it even happens. But we know this is KSR here. Okay. We know that that's a range level, and there was a stop resting above here. Okay, so that's a range level. Stops resting above here. And does it come in natural SR as well? Yes, it does. This consolidation here. Is it coincidence that when it broke that dropped there to the tick? No, it's not. So I can use that information, just like when it broke this range level, it was going towards that range level. Well, what can I do in this case? is so this is a live example. I say live example, but before it's happened. Okay, that's SR. That's just natural SR anyway, and a range level. If it breaks above here and holds, whatever entry technique you use, whether it's a moving average or some sort of footprint or breaking structure, it doesn't matter. Once it breaks above here, it holds. That's a long, got a clear target to reach for, isn't it? Take all those stuff into that range level. Okay. To the downside, that's Monday's high, and that's the setup we're looking for. Well, I'm looking for anyway. If it does break down, well, I know the next target is going to be towards this range level. If that breaks, towards that range level. Okay, and on the way to that, we've got these stops here. So you can get that before that as well. But it gives you a marker where price should and shouldn't go. Okay, so it's a brief video. It doesn't need to be too detailed. What I've given you should be enough. Let's give you another example to further prove that the range you're using is high probability. Well, look what I'm going to do now is for take from this low, the wrong way. I'm just marking out this range, okay, equalizing it from this high to this low. So taking that, it was just like the 100% retracement. If it makes it easier, it's equal just to prove that it's that range levels. Take that. I can't. I still don't have to do a box on this fucker. Take that there. Do you think that's a coincidence? To the tick. Nope, it's not. Look how these range levels are reacting onto these levels. Okay. Break above that, target there. Break above that, target there. Break above that, target there. So you can use that now, develop a scalp strategy based on what I've just showed you. Okay, I'm not leaving it vague. I'm leaving it so you can further do your own research into it, your own practice into it. Use this as a blueprint if you wish. Add it to your toolbox. Manipulate it around a bit to make it suit your style. Make a trade plan around it for your scalp style. Okay, so I hope you enjoyed that. And I'll catch you soon.